Good morning. This is Business Morning. Thank you for joining us. I'm Ladi Williams.
And I'm Chimeze Obi Iwawu. Good morning and thank you for joining us. Well, we'll kick off with the major headlines today. President Muhammadu Buhari yesterday approved the establishment of a private equity fund to facilitate the federal government's plan to lift 100 million Nigerians out of poverty in 10 years. The president indicated this when he inaugurated the National Steering Committee for the National Poverty Reduction and Growth Strategy.
And the Nigerian Investment and Growth Fund will lead the federal government's resource mobilization drive, as well as enable the management of resources and make it sustainable. Do take a listen.
The critical challenge of poverty reduction in the country prompts this gathering at the State House. President Muhammadu Buhari set up a committee with the sole aim of lifting 100 million Nigerians out of poverty in 10 years.
As members of the National Steering Committee, your responsibilities are to A, anchor collaborative efforts, B, provide oversight for the implementation of the strategy. If India can lift 271 million people out of poverty between 2006 and 2016, Nigeria can surely lift 100 million out of poverty in 10 years. The National Poverty Reduction with Growth Strategy has thus proposed the establishment of a private equity fund, the Nigeria Investment and Growth Fund, to lead our resource mobilization drive and also manage the resources in a sustainable manner.
The Vice President is leading the steering committee that includes some state governors as well as members of the Federal Executive Council.
Thus, this strategy is hinged on a vision of greater productivity and efficient redistribution, which we hope will result in a rising tide that lifts all boats above the poverty line.
As the president inaugurates the committee, members are not oblivious of the challenges they have to surmount, with security being a key issue.
We must be driven by the courage of our conviction. We must go after the criminals. We must ensure that we apprehend them, and we shouldn't let that deter us. It's a complementary process. As we're tackling insecurity, we're also focusing on economic development.
The president is confident that the new national poverty reduction strategy will improve upon past inadequacies, and so the main worry about long-term sustainability will be put to rest, particularly as the federal government employs a people-oriented approach. From the presidential villa, Gloria Umezuke, Channels Television News.
And shareholders of Skyway Aviation Handling Company will be receiving over 223 million naira as dividend for the 2020 financial year. This was one of the outcomes of the 11th annual general meeting of the company held in Lagos.
And the aviation ground services provider also reported significant improvements, both at the operational and financial performance levels. Do take a listen.
Attendance at the 11th annual general meeting of Skyway Aviation Handling Company SACO is by proxy. Physical audience is within the required maximum number in view of the COVID-19 pandemic. Shareholders and regulators observe keenly as the reports and audited accounts for the 2020 financial year are presented.
And we are satisfied with the management's response to the external auditor's recommendations.
Although revenue declined by 9%, the 2020 business year closed with a significant improvement in profit compared to 2019. In view of this result, shareholders get some returns, a dividend which amounts to over 223 million naira. Despite the odds, the chairman of the company is pleased with the performance.
What we gave last year was what we are giving now, and which shows that we really tried. Collectively, it's an effort that came together with everyone in the company, that we decided that we have focus, and we decided that
whatever the case may be or the circumstance, we will push ahead, and we did it.
The aviation handling company also attributes its success to massive investments in a bid to enhance service delivery.
Despite the pandemic and the problem that has come with Forex, we still squeezing ourselves to ensure that we get equipment on ground. Our staff are being trained, and of course we are making the environment conducive for new airlines that are coming in and those that want to use our services.
Shareholders also speak on how delighted they are about the company's performance.
The company is well represented. You can imagine this COVID-19, that what is going on in the country, and yet this company can come up to give such dividends. I think they should be applauded.
I'm very, very proud indeed to identify with the company. Yes, on the areas where they need to improve, very simple, and I've been an advocate of it, training the next generation.
Skyway Aviation Handling Company says it has no intention of slowing down on its drive to becoming one of the leading ground handling companies in Africa.
Well, our focus next will be on the electricity sector as the Central Bank of Nigeria supports the discos with loans to end liquidity crisis. Since Nigeria's power sector was officially unbundled in November 2013 and the generation and distribution arms privatized, there have been complaints by other players that the discos remit below 30% to the sector. This created severe liquidity challenges in the sector, a development that made the federal government to pump in over 1.3 trillion naira into the sector within a period of 4 years, despite the privatization carried out in 2013. In order to put an end to the liquidity problems in the sector and ensure that the discos make the right remittances to the industry, the CBN had to intervene. And so, how will the CBN's intervention support the sector growth and ensure Nigerians get adequate power supply? Damilare Ashimuyi, senior analyst at AfriInvest Securities, joins us now. Hello, Damilare. Thank you very much for joining us. Good morning.
Good morning, Teresa.
Well, it was reported earlier this week that the Central Bank had, in the last 8 months, been providing loans to discos to cover up their shortfalls and remittances to other players in the power value chain. What do you make out of this development?
Yeah, revenue and remittance shortfall is not really a new problem in Nigeria power value chain, especially as it regards to DISCO. DISCO is the revenue collection segment of the power value chain. We have the GENCOs that generate electricity. We have 6 of them, privately owned. We have the transmission company of Nigeria, which is owned by the federal government. That's like the middleman between the GENCOs and the DISCOs who are distributing to the end users. So historically, discos have found it difficult meeting 70% of collection in terms of the value of power they sent out. And this has pushed the federal government for many years to be the one bridging these shortfalls. But as one of the critical steps that needs to be taken in line with the power sector reform program of the federal government, there were several recommendations, amongst which includes that the federal government should gradually back out of bridging the shortfall of funding in the power value chain, especially to discos. So to drive this, the federal government plan to reduce its exposure this year and also roll out a number of programs. One of it is the meter access program through the central bank, which is to fund assets of discos in terms of metering Nigerians, which is one of the major problems that is driving the revenue shortfall, because the revenue shortfall we're even talking about is just a fruit of the problems that they're having. So in the light of this, in order for the discos also to have a stable financial provider who can support them, of course, this time around it's not going to be a free money like what the federal government gives. What they're taking from the central bank is a loan, though at a decent rate. And this is expected to make the discos more efficient in the sense that the central bank is giving the money is also expecting them to return both capital as well as the decent, though at a flexible rate. So it's a good initiative, and it's encouraging that the central bank is doing much more to help the discos, both from infrastructure perspective as well as to enhance their operations.
All right, Larry, but between 2017 and 2020, the federal government injected 1.3 trillion naira into the power sector to ensure that GENCOs and gas suppliers receive enough payments to, continue generating electricity. Yet, 43% of Nigerians still lack access to grid electricity. What needs to be done to ensure that these investments actually yield the desired outcome?
The funding by the federal government has always been going, most of it has been going down the drain of operating financing. What I mean is federal government intervention, in the past years has always been, mostly in the past years has always been to meet their funding needs in terms of procurement of gas or payment to the Nigerian bulk electricity company who buys from GENCO and sells to them. So not really to reach the poorest of poor who are in rural communities who do not have electricity infrastructure. And that's why bulk of the money we have been talking about goes to just meeting all these recurrent needs. So today, Nigeria has 43% of its population lacking access to energy. That's the highest deficit in the world. So that means these people does not even have power access at all. So the funding from the federal government has been going down the drain of meeting operational needs. And that's similar to what we are experiencing the PMS space. Federal government subsidizing petrol, which mostly benefits the elite, so to say, those who have the capacity to run generator, to drive several fleet cars, and not the extreme poor in the rural villages. So that is why, despite those injections, we still have the highest energy deficit in the world, because most of that funding goes into recurrent spending.
Now, according to the World Bank in its recent report on Nigeria's development update titled Resilience Through Reforms, DISCO's aggregate technical, commercial, and collection losses averaged 50% in 2020. That's higher than the 15% international good practice and the 26% allowed by NERC in the tariff policy. What can be done to reverse this trend?
Like I mentioned earlier, the revenue issue we started with is a fruit. Now, this is one of the drivers. Over the years, it has been established that the power value chain in Nigeria has a lot of inefficiency in between it. How do I mean? From the point, Nigeria has a 12.5 gigawatt electricity capacity. But out of this, 51%, which is in excess of 6 gigawatts, is idle. It's due to obsolete equipment. It's only 6.1 out of this that is available for generation. However, GENCOs are not maximizing this potential because the infrastructure of TCN cannot carry this amount of power. And so what GENCO does over the years is to generate about around 4,000 plus and send to DISCOs. And in the process of sending this, there is loss of an average of 7%, which is higher than the benchmark for the industry of 3%. So from TCN, which is transmission company, to DISCO also, due to weak infrastructure, there is an estimated loss of about another 25%. So which means that if 100 units of 100 kilowatts of power is sent from TCN to DISCO, about 25% is lost due to weak infrastructure. What DISCO takes delivery is only 75%. And from this 75%, when DISCO also send out, it is also estimated that an average of 33% is lost in terms of inability to collect from the end users. And that's why I mentioned earlier that the revenue problem is the fruit of several factors. Factors like weak infrastructure, factors like inadequate metering of Disco's client base, as well as years of running a tariff that is far below a cost reflective one. So all these are what is feeding into the operations of players in the Nigeria energy value chain, and that is making average technical commercial and collection loss to be as high as 50, like what we have in 2020. So to resolve this, the infrastructure needs to be worked on, especially from the Disco's end. But what we currently have on ground now, that we're having a tariff that is only being managed by the government, will not encourage new investors to come in and put in their money, because there's no investor that wants to invest and now still be running around to go and meet a CBN or a commercial bank to provide them with funds to bridge their operational gap. And this is a major issue that the federal government is gradually working on, by first ensuring that Nigerians are adequately metered, and also provide, encourage CBN to fund these people at a decent interest rate, so that they can optimize their operation and improve power supply in the country.
All right, the federal government, under its Presidential Power Initiative program in 2019, signed an agreement with Siemens, a German-owned power giant, to help achieve an operational grid capacity of about 25 gigawatt by 2025. And this is expected to be achieved in tranches. Do you think this project can, solve Nigeria's power problem?
Well, the project is a commendable one. The project is expected to add about 7 gigawatts Nigerian power this year. From what we last heard, the federal government have made a commitment of about 8.6 billion to the project. But in terms of meeting Nigerian energy need in whole, I think the project is far from that. For instance, Nigeria's population is in excess of 200 million. And for Nigeria to conveniently power this large population, to have a stable 24-hour power supply, we also need about 200 gigawatts of power, or about 200 million megawatts of power capacity to produce this. But currently we have 4. That's what Disco's transmit on average. And we're expecting that the Siemens project will scale it up to 7 this year, to 11 by 2023, and to 25. So by that time, even if we assume Nigerian population have not increased an inch, the Siemens investment, or the Siemens, the project that is being headed by Siemens, will only solve about 1/8 of the power need in Nigeria. But again, we must also not undermine this project, in the sense that if this succeeds, it will help, in encouraging more of this to come. At least starting from somewhere is a good thing. If we move from 4 gigawatt to 7, it then means that energy per capita will improve in Nigeria from the current 148 to about 249. And so by 2025, if we move to 25 gigawatts, the energy capital will move to close to 1,000, about 960 something. So we'll move close to our African peers. South Africa, they have energy per capita of 1,005. So it's not enough to solve the problem, but it's a good step, and we hope the project succeed, so that it can reduce the power constraints in Nigeria.
We hope so too, Damilare. Thank you very much. We do appreciate your time with us this morning.
You're welcome.
FX Commodities Market Update is next. Do stay with us. This is Business Morning.
Welcome back. Now for the AFEX Commodities update. AFEX Commodity trading indicators were all in the green in the week that ended June 21st. The total value traded was up 2.69%, while the number of contracts traded went up 83.10%. For more now, let's bring in Michael Martin, Portfolio Manager at AFEX. Hello, Michael. Great to have you.
Hi, Ladi. Good morning.
Good
Thank you for having
morning.
me once again. It's always
Yeah,
a pleasure to be here.
so give us a summary of what transpired in the week ended Monday, June 21st.
Thank you very much, Ladi. So if you look at the table in front of you, and it essentially gives a summary of the total value of transactions traded on the exchange, you would see that the total value of transactions went up by a factor, not percentage now, Ladi, went up by a factor of 2.69 from around 298 million naira to close the trading week at 1.1 billion naira. The total number of contracts traded on the exchange also went up by 83.10%, from around 15,173 contracts to close the trading week at 27,781 contracts. The total number of deals that happened on the exchange also went up by a factor of 4.4, from around 10 deals to close the trading week at 54 deals. The AFEX Commodities Index also went up by a factor of 16.98%, from 393.23 points to close the trading week at 460 points. The AFEX Export Index also went up by 12.67%, from around 150.08 points to 169.09 points. With regards to the volume of transactions, volume of contracts traded on the exchange, there was generally higher volume traded across board, with the only commodity trading lower this week being maize, which traded from around 13,220 contracts last week to close to this trading week at 1,833 contracts. With regards to price on the exchange, like you said earlier, Ladi, we essentially saw grain across board. So the price of maize went up by 22.07%, gaining more than 4,000 naira in the contract value to close the trading week at 23,431 naira per contract. Soybean went up by 6.38%, gaining more than 2,000 naira in the contract value to close the trading week at 33,615 naira per contract. Paddy rice went up by 9.12%, gaining 1,884 naira in the contract value to close the trading week at 22,534 naira per contract. Sorghum went up by 32.97%, gaining 5,770 naira in the contract value to close the trading week at 23,270 naira per contract. Cocoa went up by 1.35%, gaining just over 1,236 naira in contract value to close the trading week at 92,736 naira per contract. Then we have ginger, which also went up during the week, gaining 22.91%, gaining 20,125 naira in the contract value to close the trading week at 107,987 naira per contract. Sesame also went up by 4.76%, gaining 902 naira in the contract value to close the trading week at 50,406 naira per contract. And last but certainly not least, we have cashew nut, which went up by 3.80%, gaining 3,539 in the contract value to close the trading week at 44,684 naira per contract. And last but not least, we have the fair trade exchange traded commodity, which essentially remained unchanged in the week under consideration, remaining at 14,220 naira per contract. And as we always say, if you want to know more about the commodities market, you can always go to our website, which is www.afexnigeria.com. And if you want to get involved trading commodities, whether or not that's spot contracts or fixed income notes or product, you can always download our app, which is available on Google and iOS.
Quite a bullish week, Michael, I must say. But then, can you explain the reason behind the price hike in commodities seen on the exchange?
Thank you very much, Chimezie. So to answer that question, one thing essentially comes to mind, and that is liquidity. So at every single point in time, the prices that we report on this commodities market update, we essentially want to make sure that they are as truly representative of what is going on in the commodities market as possible. But that is usually the case when you have the same levels of liquidity that you have on the exchange in comparison to the same levels of liquidity that you have on the open market. But therein lies a problem whereby you don't have as much liquidity on the exchange. And what that means is that you don't have as much volume of transactions happening on the exchange vis-a-vis what you have happening in the open market. So what tends to happen is that there tends to begin a slight divergence in the prices that you have on the exchange from the prices that you have in the open market. So what we have tried to do, by virtue of the fact that we're not having that much liquidity on the exchange in comparison to the open market, is to give a greater weighting to the types of transactions that are happening in the open market and the prices that are currently available or obtainable in the open market, give more weighting to that in comparison to the prices that we have on the exchange. So the weighting that we have with this new methodology is a ratio of about 70 to 30%, with more going to the open market. And it's essentially so that the prices that we report at the end of the day are as truly representative of the prices that you have in the open market.
All right. Talk to us about your input financing program. You know, how well the wet season input disbursement has been going since it started this season.
Thank you very much. So the input financing program has been going, disbursement program rather, has been going significantly well. We have seen a bit of progress since we started. So we started the input disbursement program in the last week of May. Until date, we've reached approximately 18,000. More than 18,000 farmers. If you do a simple approximation of 1,000 farmers, one farmer to an hectare, that's essentially 18,000 hectares that we've already covered. It's also the case that the averages that we're doing with our field extension officers in the market nowadays sort of range between 600 to 800 farmers every single day. But the input disbursement program has not been without its challenges. So the first of which would be the delayed rainfall So we usually expect rain to have started in the month of April. We didn't see that rainfall start until the month of until the latter part of the month of May. And what that essentially means is that you can't give inputs to farmers if rains haven't essentially started. So that has sort of limited the number of farmers that we've been able to reach out to the number that I reported, which is about 18,000. Had the rain started earlier, we would have had higher numbers, pushing 30,000, 40,000. But our field extension officers, they are doing a lot of hard work. There's a lot of hard work involved in the entire process. And we are optimistic that the numbers are going to improve significantly in the coming weeks.
So who is eligible for this input from AFEX, and what is the process?
So essentially any smallholder farmer within the operational regions, and that would essentially be within the northeast and northwest and northeastern part of the country. And our process essentially stands on three pillars. The first of which would be data, the second of which would be profiling, and then the last of which, maybe not least importantly, would be financial inclusion. The process essentially starts when we instantiated an interaction with the smallholder farmer, and then we essentially register them by gathering as much data about that smallholder farmer as possible, and this involves their name, their location, their farmland, and a couple of other data points. From there, we then profile the farmer to see what essentially his input disbursement needs would be over the course of an entire commodity season before we then eventually disburse inputs to him. Before the disbursement does happen, I must say that the farmers are sort of organized into cooperatives for better accountability and administration. And then this entire process is, we leverage technology throughout the entire process. So from the process of the farmer data gathering to the farmer profiling, and also to the last input disbursement, and of course the eventual repayment of the inputs, we essentially leverage the proprietary technology that we use at the firm, which is of course our Workbench platform. So this gives us an end-to-end visibility of the entire process from start to finish.
All right, but what has been the reach and impact so far?
So the reach essentially has been, for example, this year alone, we've already done approximately 18,000 farmers. The goal is to get to as high as 150,000 farmers. But the impact cannot really be measured until, of course, the farmers harvest the crops that they've cultivated, and then, they repay back the loans that has been disbursed to them. Over the past couple of years, we've been able to reach out to more than 100,000 farmers. So what I can't tell you that has been the impact, as we have reported at several times during the course of this show, has been that with farmers that have been under the AFEX network for a significant period of time, they essentially experience very little to no hunger, and they're essentially food secure. And so what we have also seen is increased productivity due to the quality of inputs that we give to them on a year-on-year basis, and by extension also an increase in their livelihood and income. So what that essentially also does is that it increases their purchasing power, essentially raising them out of poverty. So that has been the impact in the past couple of years. And we also expect the same to continue with this year's input disbursement program, seeing that we're also looking to reach out to a higher number of farmers.
Now, there are definitely plans on repayment. What is AFEX putting in place to ensure this is going efficiently?
Thank you very much for that question. And that's a very important question to answer, because the loans are only as important as how well they are repaid at the end of the day. And I have alluded to how historically we have seen a 98% repayment rate for all the loans that we have disbursed to smallholder farmers. There is a reason why that is the case, and that's because of some of the structures that we have put into place to ensure that that repayment does happen. The first of which would be we have warehouses situated at localized places that are close to these smallholder farmers, which essentially helps us facilitate a last mile interaction with the smallholder farmers. What this essentially means is that it's easier for them to repay the loans, knowing fully well that they won't have to travel far in order to repay the loans that have already been that has already been disbursed to them. The second of which would also be, remember I mentioned that the farmers are usually organized into cooperatives, and what this essentially means is that it's easier for our field extension officers to monitor whatever is going on with the smallholder farmers, and it's also from an accountability standpoint, because a farmer is less likely to default on a loan if he's working within a cooperative, as opposed to if he's working with if we're working with just one single smallholder farmer per time. Another infrastructure that we've also put into place, or structure that we've also put into place, is we have field extension officers having monthly meetings with the smallholder farmers that we disburse loans to sort of get an overview of how the cultivation is being, how it is going, and what exactly it is that we can do to help them improve pending when they eventually harvest. And then lastly, at harvest, when they eventually bring these products to the exchange for transaction, we essentially offer them competitive prices, meaning that if the price of maize at harvest is around 150,000 in the open market, what you would essentially also be seeing on the exchange in transaction with smallholder farmers is also around the same 150,000, meaning that farmers essentially get competitive prices for whatever volume of commodity that they bring to the warehouse in repayment of the loans that has been disbursed to them.
Well, Michael, just before we let you go, now, if someone like Laddie and I would want to, I mean, we've seen that bullish trend in the market this week, and hopefully it's going to continue in the new week. If Laddie and I, even though we are not farmers, we want to invest in this commodities market, how do we go about that?
Look, Laddie and Chimeze, I've been talking about this for the better part of Laddie said last week that he bought ginger, but me and you know that ginger.
Don't mind him.
Just a handful of ginger. Really.
But look, it's better late. But it's better late than never. But to truly answer your question, there is an easy way for you to engage in the commodities market. We've more than made that easier for you by the fact that you have the technology, you have the app on your phone. You can essentially create a profile, log in, and then buy commodity. It's essentially as simple as you buying credit on your phone.
So I don't have to be.
So what you then do is when you
don't have to be a farmer. I don't have to be a farmer to, you know, play in this market.
Trust me, we don't discriminate. Anybody can buy. We don't discriminate here. We don't discriminate. Anybody can buy commodities. Just download the app, figure out what commodity that you want to buy, maybe by virtue of the research that you've done, depending on the seasonality that is currently in play. And then you just buy that commodity and then wait and hope in appreciation of the value of the commodity that you've bought. But we don't discriminate, like I said. Anybody can buy. Laddie, go and buy. Thank you.
And hopefully that will help hedge against inflation.
I like the way ginger looked this morning.
Yes, you will.
Okay, maybe you are hoping to, put your money in there.
Yeah.
Okay. Anyway, thank you very much, Michael, for sharing your time with us today.
Thank you.
You're welcome, Chimeze.
We'll take a moment. We'll be back. Let's do an opening call to the market, and we have Will Ibon there. Well, Will, the equities market was heavily beaten yesterday. Who were the major culprits?
Good morning, Chimi. To answer that, I'll start by saying that I really wanted to share my guest's optimism yesterday about the equities market. However, we saw the market plunge further into the bear territory as investors dumped Airtel's African stocks, which dipped by 10%. Interestingly, this is the second time this month that we see investors selling off Airtel Africa stocks. It will be interesting to know what is driving this. Whatever be the cause, it had a significant impact on the all-share index, as it fell sharply by 1.81% from 38,545 0.30 points to 37,847.07 points. It also brought the market cap below the 20 trillion mark. Of course, month-to-date return turned negative, currently at about 1.5%, while year-to-date loss increased to 6%. Meanwhile, the total volume of trades increased by 4.3% to 218.27 million units, valued at 2.72 billion naira, and traded in 3,524 deals. Transcorp was the most traded stock by volume at 42.44 million units, while MTN was the most traded stock by value at 333.75 million naira. As for the sectoral performance, it was mostly negative. The industrial goods, insurance, and banking indexes declined, while the oil and gas and consumer goods sectors recorded gains. The drop in the share price of First Bank and Zenith pulled back the banking sector index, while the Boss Cement, down by 1.95%, was responsible for the fall in industrial counter. But we have on the phone Afolabi Benro, a trader at Stanbic IBCC Stockbrokers, to tell us more about the happenings in the equities markets. Good morning, Benro. Welcome to the program.
Good morning, Will. Thank you for having me.
You're welcome. So, Benro, tell us, what's going on with the Airtel shares?
So Airtel has actually been on offer. When I say on offer, it's been there's been no major buyers in the market. It's mostly been investors that have been willing to sell, that have been placing their orders in the market for at least a couple of weeks now. So what usually happens is that unless a block of 100,000 shares trades at a single clip, the price would not actually change for the day, which is what we saw happen yesterday. So a single clip of 100,000 shares traded at the lowest end of the market, which was 678 naira, and that's what caused the dip in the price of Airtel. Today, we're still seeing Airtel on offer at the lowest end of the market. So far, it's just about 31,000 shares that are there at 610 naira 20 kobo. So it's likely that we'll continue to see the bearish sentiment continue in the main today.
Wow. So what would you say is the opening call in the market at the moment?
It's actually very quiet, eerily quiet, to be honest. We expect that things might pick up a bit as the session goes on, but right now, investors are still sort of watching to see what's going to happen for now.
Thank you, Benro. That was Adik Benro, Afolabi Benro, a trader at Stanbic IBTC Stockbrokers. Now, let's turn to the activities in the unlisted market. The NASD index and the market cap fell again in Tuesday's trading session, decreasing by 0.93% to 738.91 points at 525.23 billion naira. Total volume and value traded in 20 deals fell by 87.31% and 55.83% each. Only 3 stocks were traded yesterday, and the Nigerian Exchange Group was the most traded security by volume and by value. However, the share price of the Nigerian Exchange Group dropped yesterday by just 40 kobo. We move over to the fixed income market. At the fixed income market, bonds traded flat, somewhat bearish, although the average yield was unchanged at 11.9%. Across the benchmark curve, the average yield contracted at the mid segments due to the demand for the March 2027 bond, but expanded slightly at the long end due to the sell-off of the March 2035 bond. Meanwhile, it closed flat at the short end. The Treasury bill market traded mixed as average yield closed flat at 6.4%. A similar trend can be seen at the OMO market, as the average yield at the OMO segment closed flat at 9.7%. We're hoping that the auction which is taking place today is going to give more liquidity to the system, probably change the sentiment that is going on there, and we're hoping to see more investors buy more bonds and securities, basically instruments that would help us. So, Chimi, that's what we have for you today.
All right, thank you very much, Will. We're talking about equities. I mean, it's interesting to see how the market capitalization has just plunged. I mean, I remember at the end of 2020, the market cap had hit 40,000 trillion mark, and that was for the first time in history. And now we're having market cap below 20 trillion.
We even said that the investors lost about 360 billion naira.
Well,
let's
just see. Let's hope that maybe a miracle will happen.
We're hoping that too. Thank you so much, Jimmy.
All right, we'll take a break now, and when we come back, we'll cross over to London. Just stay with us. All right, let's see what's happening in London. We have Juliana. Good morning, Juliana. What is the latest on Morrisons Takeover bid? Labour is asking the government to step in to ensure a potential private equity takeover of the supermarket chain does not affect Britain's food security, damage farming, or even lead to job losses.
Well, we don't know much more. What we're going to be waiting on is CD&R to come back with a better offer according to British laws. They have some extended time, so they've got until 17th of July to up the bid. Over the weekend, CD&R, which is a private equity firm run and based in the United States, they put in what has been described as an audacious, unsolicited bid to take over Britain's fourth largest supermarket, Morrisons, for £5.5 billion, took the industry by surprise, and it has led some to question what the motive is of some of these US private equity funds. And we've had something similar with Asda and the takeover by the Issa brothers and TD&R Capital, pretty much bought with a handful of debt. And I think the concern from the Labour opposition party is the jobs. Morrisons employ over 118,000 people. They're one of the country's biggest private sector employers. And the British government do have the power to intervene when a takeover or an acquisition could affect, it could have long-term implications. So that's exactly what the Labour Party are asking the government to do. When the story broke on Monday, Boris Johnson, the Prime Minister's office, declined to give a comment, but we've got PMQs today, so I expect that there will be some ferocious questions from the opposition when the Prime Minister hits the dispatch box.
Right, okay. Now, new £50 note featuring mathematician, computer pioneer, code breaker Alan Turing goes into circulation today. How soon do you hope to have that note in your purse, considering that a lot of people are going cashless?
Yeah, hopefully soon, since it is in circulation today to mark the birthday of Alan Turing. Yes, as you said, a famed mathematician, pretty notable for breaking a code which helped Britain win the World War II against the Nazi opposition. So yeah, it's a fantastic day for the Bank of England and Rishi Sunak, the Chancellor. They've been cheesing in front of the camera with the £50 note. It's a polymer note, a plastic note, so there will be no more paper notes in circulation from October. A lot of people have asked, whether it's necessary because we are all going cashless. But a lot of people do like to have a pinky £50 note in their pocket. Some have described the £50 note as the currency for the corrupt elite. Only 1 in 13 notes in Britain are £50 notes. But I believe they print up to 2 million £50 notes a day. So, there's still plenty in circulation. But now, because it's all polymer and it's been designed to stop fraudulent copies, this is supposed to be safer and a celebration of one of Britain's greatest.
All right, and we look forward to having more update from you later in the day on Business Incorporated.
Thank you.
And now to the crypto market with Ladi. Well, Ladi, Bitcoin dropping below $30,000 sparks fears of another crypto winter. But it looks like the bulls aren't worried. I was listening to an expert this morning, and he says Bitcoin's fundamentals are good, and the market conditions in 2021 are very different than the last big crypto crash in 2018. In other words, we are far from a bear market. Do you share this view?
Well, that's what most of them, the analysts, are saying. But, if you experienced the last bull market and the bear markets that happened after, you would know that it looked similar to this. There was still optimism that, Bitcoin would, recover at some point. But a 2-year or 3-year bear market ensued after that. But, we'll see. We'll see what happens. But anyway, right now, it's fear, extreme fear in the market at 14 points today. $1.36 trillion market cap is up about 3.18%. 24-hour volume, $154.66 billion traded, up by 18%. Bitcoin dominance is still inching up there at 46.74%. Let's bring in Rume Ofi now, digital market analyst. Hello, Rume. Okay, looks like we'll try and get Rume back again. Bitcoin this morning, $33,943 after breaking that 30K region and getting as low as $28,000. A lot of fear in the market when that happened, but it's recovered now, up about 3.75 above the 30K region again. 24-hour volume, $63.59 billion traded. Price of Ethereum, $2,005 this morning, up 3.10%. Volume traded, $37.59 billion traded in Ethereum this morning. Let's look at the chart. First low was $28,000 and recovered back to the 33K region this morning. We still have the MACD in bearish territory right now. Histogram is also forming in the bearish momentum on the one-day chart. But we have some volume coming in here. So the bulls are defending this region with their lives at the moment. Top alts by market cap. You see some alts also recovering there. BNB touched about right below $250 yesterday, back at $290, up 2.27%. Cardano is also back up at 6% at $1.27. And Dogecoin, the king of the memes, 21 cents, up 7% this morning. XRP still below the $1 mark at 65 cents, up 6.29%. Top 5 gainers, we have Silo there, $2.37, up 26%. LPT is up 17%. Solana doing good this morning, up 15%. H&T up 13%, and COM up 12%. So it's funny how yesterday the top 5 gainers were stable coins, showing that traders were running into the stable coins because of fear of losing value in sats and dollars. I think we have Rume now. Hello, Rume.
I'm online, yeah. Good morning, Vadi.
Good morning, Rume. Great to have you. Well, it's China all over again. Same thing happened 2017, 2018 bull run. China clamped down. But I'm wondering this time, is China really done with crypto?
I think all of these are happening because of the digital yuan that is still being out there. It's already been tested in 5 provinces in China, and as well as their products. They are just interested in their own stock, you know. But I think this is not the first time. 2014, they came up and it was 1,200 at that time, the price of Bitcoin. It went to about 200, 2018 was actually the worst. Then I think this one was is really huge, and I think it's an opportunity for them to be a global player in the blockchain space. You know, all of them telling miners to leave, a lot of them going to Kazakhstan, Texas in the U.S., and some other states like Maryland in America. So the U.S. could actually position itself to be the global leader in emerging technology, and China is really losing out when it comes to what is going on. But this is really huge, and I think it's a disadvantage for the average tech guy that is involved in blockchain space and those that are hardly out of Bitcoin, most especially. So it's a win-win situation for the people, because the idea of this technology is to make individuals actually do finance or get involved in transactions freely.
All right, Rume, is it better to just pack it up and expect the bear market?
I can't say this is the bear market, because it's still a worse situation. The COVID era, we saw a $9,000 market go to about 3,500 market. So the fact that we bounced back yesterday from 29,000, it was very scary, you know. But one thing I always tell people is that at this stage, emotions don't have to play in. It's the game of common sense, and very soon we're going to be back. But the odds are really breathing really high, and a lot of things get rest, most especially those from the main coins and community. At some point, I heard immediate silence for those having Dodge in their wallets, because they bought 0.8 and now it's 0.1. It's really terrible.
Okay. All right, Rumi. Thank you so much. Always great to have you on the program.
Yeah.
Yeah, Jimmy. So there you have it.
Maybe, I mean, if you want to play in the market, you look at the stable coins instead of packing it up, because I guess there's a lot of bullish sentiment there, you know, towards this crypto market.
Because
and I guess it's just a wait and see that, you know, the traders are doing right now. And of course, waiting and watching, you know, the regulators from the China.
Yeah.
You know, China is the key factor right now.
China
but we'll
running
see
everything.
what happens eventually. In any case, buying the dip, you have to be very careful and
so
seek
you don't catch a falling knife.
Advice.
Yeah.
Exactly. All right, that's it on the program for today. Thank you for watching. And don't forget to join us by 1:30 this afternoon on Business Incorporated for more updates on developments in the world of business. I'm Chimeze Obi Iwago.
And I'm Ladi Williams. Thank you for watching.